please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, there might be some doubts on global bull market, but there's one Spanish bull which every year in the month of June really goes on a rampage, and that's of course Rafa Nadal, 11th French Open title for Nadal. Lucky to watch him, of course, and Federer, both of them doing great for the world of sports. But back to markets. This is Bazaar Morning Call. I'm Anuj, and with me Surabhi and Reema. Good morning, both of you.
Good morning, Anuj. Good morning, Reema. I was just wondering, Anuj, trying to imagine what you were doing when the final hit was. Did you jump in your chair, or did you do a victory dance?
You cry? Tears of joy?
Yeah, I mean, you know, two or 3 years back, you thought, you know, for all the joy that these two have given Federer and Nadal, they're done. But I mean, last 6, sometimes you wonder it's 2008 or 2018. You know, we've all worried about market, we're worried about mid caps, and these two guys are winning all the, you know, Grand Slams, ranked world #1 and world #2. I know, you know, that every time Federer wins a slam or Rafa wins a slam, there's this debate about who's the greatest of all time. I just believe that, you know, let that debate, you know, go on for some time. Let it settle. Let's just enjoy the, you know, the way both these are playing. And I think in 3 weeks we'll have Wimbledon and, you know.
And FIFA, that starts, FIFA World Cup. So for all the football fans, that's there too.
Yeah. I mean, that's the first time in 4 years I actually get really excited about football. So I felt it building, and I was doing a lot of reading over the weekend as well. So yeah, I think there's plenty of sporting action. Yeah, but right now we need to get back to markets. It is Monday. So Anuj, the setup this morning, obviously, I think there's a lot of global sort of news flow that's back in the thick of the action. There's a slight sense of caution. We had that tweet storm over the weekend from the US president. He seems to suddenly hate his Canadian counterpart now. So yes, there's a bit of caution there. By the way, the Canadian currency reacted, so it's gone beyond just Twitter and headlines. There's a bit of a reaction in markets as well. The Canadian dollar has fallen because of all this trade talk worry. And then we get central banks meeting this week as well, and, you know, markets thinking that maybe we'll get that rate hike from the Fed. Now, where does all of this leave us and the setup that we saw on Friday, Anuj?
Yes, so, you know, the issue here is that for our market, honestly, the only, you know, parameter that we have been reacting to is the crude prices. If you see, the market's been so one-to-one correlated inversely on what's happening with crude. You know, you went to 10,900, at that point crude was down. Then, you know, you had a big rally in crude, the market fell. Again, you know, it's so somewhere around 75, 76. I think we are right now at a very crucial stage. We are at the top end of a crucial range. Now, if a market is refusing to fall, then it will go up. That is a logical argument that, you know, you would want to make, that a lot of bad news has been thrown at the market, but it's not just budging. It's just somehow that 10,800, 820 is a big resistance zone for the market. It's gone there twice and has, you know, come back from there. So let's see if we have a close about 10,820. I think that is important because that would lead to perhaps a big rally. And on Friday, you saw a lot of short positions being added by FIIs, especially in index futures. Honestly, the only, you know, parameter that we have been reacting to is the crude prices. If you see, the market's been so one-to-one correlated inversely on what's happening with crude. You know, you went to 10,900, at that point crude was down. Then, you know, you had a big rally in crude, the market fell. Again, you know, it's so somewhere around 75, 76. I think we are right now at a very crucial stage. We are at the top end of a crucial range. Now, if a market is refusing to fall, then it will go up. That is a logical argument that, you know, you would want to make, that a lot of bad news has been thrown at the market, but it's not just budging. It's just somehow that 10,800, 820 is a big resistance zone for the market. It's gone there twice and has, you know, come back from there. So let's see if we have a close about 10,820. I think that is important because that would lead to perhaps a big rally. And on Friday, you saw a lot of short positions being added by FIIs, especially in index futures, and they bought a lot of index puts. Now, if these short positions don't get followed through, in that case, you can expect a short covering. The counter argument is that, you know, you're so close to the higher end of the range. If the market starts to fall, then there's a risk of a double top. But, you know, let's just take it, you know, as it comes. This is not a market in which you want to predict whether it's going to 10,500 or it's going to 11,000, because I think both the probabilities are wide open, you know, but the more I look at the market, the more sense I get that the bears perhaps are losing the grip on the market. I think Friday was the best indicator where, you know, the market had all the ingredients for a fall. But because, you know, Reliance has found its mojo, that's keeping the market higher. The only problem is the HDFC twins. They are struggling. And that, I think, could be a matter of time before they start to recover. So let's see. As of now, I think the bulls would want to believe that they're slowly coming back into this game.
Yes, and the heartening feature, Anuj, of last week's trading action was the outperformance of the mid-caps.
Yes.
They've been rank underperformers, nearly 15% on a year-to-date basis. Do you see this outperformance of the mid-caps continuing? Are they now turning into value buys?
Yeah, you know, I think that's the word, value buying, which is clearly visible. And it's easy to dismiss all mid-cap rallies as short covering. But the more I look at the delivery stats, the sense I get is there's been quite a bit of portfolio buying in a lot of names. Pharma, for example, on Friday, there was decent delivery buying in a lot of names. I think there's been a lot of buying in select auto ancillary names. There's been a lot of buying in select chemical names. There's been a lot of buying in select commodity stocks where we had seen quite a bit of decline. So it's no longer just short covering. That's just a point here. This is not 2017. So just buying across the board in mid caps and small caps won't help you. You'll have to be really choosy about your stocks. There are a lot of stocks making new highs, which is an indication that obviously there's quite a bit of buying which is there. But it's not going to be good to just, you know, either shun it as a space or just go out, you know, whole hog into the mid caps and small caps. Be selective, but I still believe that, you know, perhaps large caps could be the way to go in 2018.
Just one more point, Anuj. I just want to place on board the announcements that we got from the interim finance minister on Friday. Once again, a lot of talk of this bad bank being put in place. So they're talking about some kind of an asset management company. We didn't get details as to how is it going to be funded. But the PNB chief is the chairman of the committee that will be looking at this AMC of sorts. And separately, there's this whole Project Parivartan, PFC, REC, and, you know, whether they'll be looking at some kind of a bad asset warehouse for the power sector, which we know is a problem. But Anuj, the question is that for these stocks, is it going to be a case of once bitten, twice shy? Because we saw it with the recapitalization, and then, you know, things really fizzled out from there.
These stocks are, you know, good traders' delight. You get them right, you make a lot of money. Can you do that? I mean, if I was in the market, I would never even try to do that. You know, not my cup of tea. So, you know, you want to look at PSU Bank Index. Over a 1 month period up 7%, but over a 3 month period or over a 10 month period, 6 month period. I think the only lesson in this entire 1 year, 2 year move has been that if you want to play PSU banks, perhaps you should look at SBI and no more, because that's the one which is still sort of survived all the scare and, you know, everything. But I mean, look at these charts. I mean, I don't think anyone can really claim that, you know, you got the top right, bottom right. It's not a portfolio sector for sure. You want to play on the trade side, perhaps it will give you, you know, a lot of value over a 2 or 3 week period. That's it, I think.
Okay, all right. Well, on that note, let's get started. Take a look at what our wise experts have to say as we get set for trade this Monday morning. Timothy Moore of Goldman Sachs says that they are staying overweight on India as earnings recovery remains underway. However, he says incorporating the first quarter calendar year 18 losses in banks, they lower their CY18 estimated EPS growth by 2% to 14% year on year, but retain their CY19 growth forecast of 18% Y on Y, partly aided by a lower 2018 base in banks. Within sectors, he has upgraded metals and mining to overweight and remains overweight on private bank, autos and industrials. Themes that he likes include rural recovery, infrastructure beneficiaries and affordable housing. Timothy says stocks on the conviction list include Tech Mahindra, L&T and Reliance Industries.
Okay, let's get you some money market views then. Pramit Brahmbhatt of Veracity says crude has resumed its rally and higher oil prices will put pressure on the rupee. He expects the USD-INR pair to trade in a range of 67.20 to 67.80. Remember, on Friday we had a big decline on currency.
Ajay Banglulia of Edelweiss says the buying action seen on Friday in bonds might provide some confidence to the market, and the same trend can continue this week now that the uncertainty behind the first rate hike is out of the way. He says although the rally was despite a weaker rupee, the trajectory of crude and currency remain crucial to the sustainability of gains. He's expecting the 10-year benchmark bond yield to trade in a band of 7.90 to 7.98 today.
And now for all the action from the world, let's go across to Mangala Malu.
Well, I'll start with 3 tweets. 2 of them sum up the weekend and 1 will sum up the week. So the first one was the G6+1 summit that took place in Canada. Donald Trump has tweeted on PM Justin Trudeau saying that the Prime Minister of Canada acted so meek during the meetings that after the conference, he actually said that US tariffs were kind of insulting and will not be pushed around. Donald Trump calls this very dishonest and weak. On top of that, Donald Trump also tweeted saying that fair trade is now to be called fool's trade if it's not reciprocal. So that sets the agenda as far as trade tensions are concerned. So we'll keep an eye out on that. But the big excitement is as far as the meeting between Donald Trump and Kim Jong-un is concerned, slated to meet in Singapore on June 12th. While their lookalikes are roaming around all over Singapore, Donald Trump has posted this tweet just a few minutes ago saying that great to be in Singapore, excitement in the air. So that is something that the street will be watching out for. But let's talk about the markets now. Wall Street, they ended with mild gains on Friday's trading session, but most of those gains were capped given the trade tensions. At the same time, we saw the European markets, they were mildly under pressure before a close on Friday's trading session, primarily on account of these very trade tensions. The political tensions in Italy, they continue. So that index was the key underperformer there, down by about 2%. But there are a lot of central bank meetings as well slated this week. On Feb 25th, you have the US Fed meet where a 25 basis point hike is expected. On Thursday, you have the ECB meet. Commentary on QE exit will be most important. And then on Friday, we have the Bank of Japan central bank meeting where no change is expected. As a result, the Asian markets, they're slightly under some bit of caution. The Nikkei, which opened in the red, has now moved into the green. The Shanghai is still sitting with a cut of 0.25%. The SGX Nifty indicating a start of close to around 17-20 points in the green.
All right. Thanks, Manglam, very much for that. Yeah, indeed, those videos were quite hilarious, I must add. Well, let's now get ready for the real deal. US President Donald Trump and North Korea's Kim Jong-un arrive in Singapore for the historic summit meeting. CNBC's Cherry Kang reports on the agenda and what the summit means for both the countries. Good morning, Cherry. This is history in the making.
That's right. So both leaders of the United States and North Korea flew in to Singapore yesterday. This doesn't mean, though, that it's break time on this Monday ahead of that summit that's happening tomorrow. So we've got Sung Kim, a U.S. ambassador to the Philippines, a former nuclear negotiator, sitting down with North Korean Vice Foreign Minister, hammering out details of the deal that we're going to see as the two countries wrap up the Singapore summit later in the week. Yes, it's true that the leaders will sit down, shake hands potentially, and then they will make the big picture decision. But that's the crucial step in terms of denuclearization deal. And of course, the big acronym that we keep using is CVID, complete, verifiable, irreversible denuclearization on the Korean Peninsula. And as for the latest this morning, we just heard from, well, didn't really hear, but we saw a Twitter from U.S. Secretary of State Mike Pompeo, once again emphasizing that acronym CVID this morning. In terms of the setup, the background that you can see behind me, the Sentosa Island, that's exactly where the summit will be happening tomorrow, 9 a.m. Singapore, Hong Kong time. And we're actually just about 6 minutes away, a drive away from the Capella Hotel where the summit is happening. And this entire city stage overrun by media people as well as the security personnel. And let me get this, let me just get this out to you. Close to 40% of Singaporean police officers will be on this summit, making sure that nothing goes wrong for this historic summit between the United States and, of course, North Korean leader. Guys, back to you.
Okay, thanks a lot, Cherry, for that. Of course, Sentosa Island, beautiful place. Let's move on then. Paul Kitney now joins us, Chief Equity Strategist at Daiwa Capital Markets. Paul, hi, good morning. Your thoughts on what you just heard from Cherry, and you reckon this summit could have something that could change the fortunes for the market?
So good morning. Yes, no, it has been sort of the summit that's been looming large for some period of time. I would sort of I guess start from a sober beginning here, and sort of say that there's more than just the United States and North Korea involved in any sort of type of detente that takes place on the North Korean peninsula. So there are 5 sort of key stakeholders involved. There's South Korea, North Korea, the United States, Japan, China. And any type of agreement or any sort of feasible scenario or outcome that can come from this that could lead to some form of detente, whether it be denuclearization or less likely reunification, is going to require each one of those parties not being any worse off than the status quo. So I think we need to assume from the beginning the status quo is the most likely outcome. And if something does happen from this, is that today would tomorrow I should say would be just the beginning of those discussions. So based on our work, we've looked at this quite closely. And we've actually sort of worked through a decision tree, sort of looking at the key binary decisions, which number one is peace treaty or no peace treaty. Number two is denuclearization or not. And three, which is reunification or not. And when we go through all the various outcomes there and we work it through, we find that reunification is unlikely due to the fact that China does not want to lose its buffer state, and also South Korea does not want to experience the same type of fiscal burden that West Germany had during reunification, or even South Vietnam. So when we look at it, that the one possible outcome that could be very interesting from a market perspective, although we cannot put a high probability, but a non-zero probability, is denuclearization and detente that brings about market-based reform in North Korea. Now, this could usher in not only foreign aid, but also foreign direct investment, which could be very positive for numerous companies in South Korea, whether it be in engineering, construction, materials, construction machinery, logistics, etc., and possibly also for regional companies in that space.
Okay. Yes, indeed, the end of sanctions could bring about an investment boom there, but Donald Trump's unpredictable negotiating style makes predicting things very difficult. Paul, good morning. What did you make of this tumultuous G7 summit over the weekend and the implications for the markets?
Well, I'm not sure we can derive too many conclusions from what happened over the weekend. It was obviously disorderly. Which I suppose, given the current regime, should not actually be terribly surprising. Post the more isolationist approach on TPP, on NATO, as well as the G7 on the part of the current U.S. administration. I don't really see much implication for it. I think it is tightening near-term concern regarding trade friction. My general view is that we don't end up in a major global trade war, that we may have an isolated skirmish, but it doesn't turn into the real thing because everyone loses in that particular outcome. But certainly is tightening near-term concerns. But I'm encouraged by the fact that the markets are shrugging it off. So as you mentioned earlier, when we look at markets today, they're pretty flat, and I suspect that is a squaring of positions ahead of tomorrow's binary event, which I think dominates all other considerations right now.
Paul, very quickly then, another event this week is the Fed meeting. I guess markets pricing in 25 basis points rate hike. Is that what you're going with? And a simple question, do you see the U.S. market breaking out of its range-bound movement of the last couple of weeks?
Well, so first of all, yes, I think consensus is going to be right about the near-term rate hike. It's consistent with this gradual policy normalization path that the Fed has flagged. If we look at the U.S. market, it's been in a consolidation phase here for several months. I mean, we've had a correction that I guess began in late January. So we were into the fifth month. This is a similar order of magnitude in terms of time that we saw in the last 10% plus correction that's occurred since the global financial crisis, which was Q4 2015, Q1 2016. But if we look inside the U.S. market, we can see that NASDAQ, for example, recently has already broken to a new high. It's pulled back a touch. We look at the S&P; it's gradually shifting higher. My view is that we're getting towards the end of this corrective phase, and the concerns over rising bond yields and trade friction are overdone, and I think we're pretty much close to that point.
Paul, thanks a lot for your time this morning. Let's do one thing. We'll take a break on that note. Up next, of course, we will have all the top 10 stocks to watch out for.